to another day trading video, and today we're going to go on to part 2 of fair value gaps. In part 1 I already showed you what it essentially means, how to spot it, how what is a true fair value gap, and today I'm going to show you it on the chart. So a little fun little simple video. I'm going to show you about three, maybe two, maybe three fair value gaps for bullish and bearish. So we already have one simple bearish, so we're gonna start with bearish. All right, so we have this gap right here. You can see there is a gap in between this candle. This is a 3 candlestick pattern. So what do? We start from the top of that candle, boom, to the bottom, extend it, and you can see that price respected that area. All right, so if we draw a tool, there's a gap right here. Stock went down. We can see that price brung it up, essentially acting as a magnet to bring it back down. All right, so if you entered in shorts right here, you would have been in the profit with take profits being over here or anywhere else. All right, so that is essentially one example of a bearish fair value gap. Let's try to spot another. We can see, wow, the stock went up. Oh, we can see a bullish fair value gap actually. So you can see there is a gap in between. This is a this is a candle. There's many bullish fair value gaps. You can see one right here. So let's spot them all out. You see one right here. I'm gonna change these to green. Green right there. You could spot one right here. And oh, almost missed that one. You can spot one right over here as well. Boom. So what do we do with this information when there's a bunch of fair value gaps stacked on to each other? So what do we do when we have a bunch of fair value gaps stacked? All right, so when we have a bunch of fair value gaps stacked up upon each other, we can just see which one gets respected. This one, the first one, doesn't get respected. You can see that price just ignores it and heads right back down. You can see for the second one, it actually gets respected. So price went down to this level and went all the way back up. So what does this mean for these two? Well, essentially, it doesn't matter. Those fair value gaps do not matter anymore. We only pay attention to this one, and we can see that this one actually got respected. What happened? A fair value gap was formed. Price went back up. The fair value gap essentially acted as a magnet, bringing the price or the stock back down to this level just to boost it back up. Why? Because there was a lack of sell orders within that area. All right, so let's look for another amazing one, or we can spot another bullish one. 3 candlestick pattern. You see that this one is a red, but the first and third candle, like I said, do not matter. Only matters the middle one. All right, so you can see there's a gap between those from the first to the top. This is the first candle. This is the third candle. From the top of the first candle to the bottom of the third candle. You can see that stock went up, brung it down, lack of sell orders, brung it back up. Very simple. All right, let's see if we can find a bearish fair value gap. And how do we spot a bearish fair value gap? We see that the candle in the middle is red. All right, so this is actually an example right here. From the bottom of the first candle to the top of the third candle when I say bearish. All right, you can see there's a gap in between these first and third candles, and the middle candle is a red candle, essentially meaning that this is a bearish fair value gap. So let's see what happened. All right, price went back down, then it went up. The bearish fair value gap essentially acting as a magnet respects it. I know there's wicks out of it, but if a candle is not fully formed out of it, that means it is respected. If a candle is formed, it is not respected. But if a candle just wicks outside of it, it's respected. It's still respected. So you can see that a candle wicked out of this fair value gap, but did not form a body. All right, it did not form a body outside of it. So this is respected. But let's continue on. Delete this. All right, short little video, but boom, went down, went back up. The fair value gap essentially acting as a magnet to bring the stock back up. What happened? Lack of buy orders. So what happened next? The stock went right back down. This happens a lot of time. Fair value gaps is like one of the most essential concept for trading. Very, very useful. You can see another right here. What happened? All right, I want you to answer this for yourself. Boom, we have the bottom. So this is the bearish. We have the bottom of the first candle and the top of the third candle. Boom, right here. What's gonna happen? Stock is gonna be bringing down. And what happened? It did. Let's look for a bullish. Or you can see right here too. And it was short, but still, the top of the third candle and the bottom of the top of the first candle and the bottom of the third candle, and the middle candle is green, so it's a bullish fair value gap. Price went up, and then boom, went up, then down, essentially acting as a magnet. You could have went for a long, getting a short little profit, and then boom, it went back up. I know it went down further, so you could have seen this as, hey, it got disrespected. And for an inverse, I'm going to show you more detail into that, so you can essentially know how inverses work. And this, since inverse fair value gaps are essentially the opposite of a fair value gap. But that's it for today's video. Thank you so much for watching, guys. Please like, comment, subscribe, and if you have any questions, please, if you have any questions, please leave it down in the comments down below so I can answer them and help you further into learning about stocks and day trading. So yeah, that is it for today. This is Josh Trader Wars, and I'll see you guys in the next video. Peace.